Hello, Smart Money 2 podcast listeners. Welcome to this week's show. My name is Kirk Chisholm, and I'll be your host. So today I'm joined with my good friend, Rich Checkan. How you doing today, Rich?
I'm doing great. Thanks for having me, Kurt.
Good. Well, I'll bet you'll never guess what Rich is involved with by his background. It's a
Plants?
secret. You got to watch the you got to watch the YouTube videos, see what he does. Anyway, Rich, so tell us a little, I know you've been on the show before. Tell us a bit about your background and what you do.
All right. So I'm president, CEO of Asset Strategies International. So we're a Rockville, Maryland-based firm, 42 years old now. I've been with them 28. We buy and sell gold, silver, platinum, palladium, bars, coins, certificates, rare coins, mainly U.S. early gold and silver, plus world and ancient. So we make a two-way market in all of that material. But easy one-liner, we're the gold guys.
He's the gold guy. Yes. And he traffics Palladium catalytic converters. I think that's the only thing
That's
they're
too
used
much
for,
work.
right?
It's too much work.
But just don't let it. I mean, I remember back when they were expensive, people were stealing catalytic converters out of cars. Of
Yes, they were, but it's come down a
course.
bit. It's under $1,000. Gold is double that. So
Yeah. Well, let's dive right in. So you're the gold guy. So tell us what are you seeing in the gold market today? We've seen this historic breakout of gold a few months ago, but most people haven't noticed. So what's going on in the gold market? Tell us.
yeah, so plain and simple, I think this is what we call the stealth gold market. It's we consolidated first off for about 4 years at all-time highs for gold, and we consolidated at probably 50% of all-time high, or, yeah, about 50% of all-time highs for silver for about 4 years, and then finally, the last year and into this year, we started a bit of a breakout. And there's a lot of consternation on the part of Western investors. They feel like gold is already too high, and they want to get in, they want to be part of the rally, but they want to wait for prices to come down. And I think what they're missing is that we consolidated for 4 years not to hit our head on the ceiling and go south. We've consolidated for 4 years to build the support to go higher. And I think gold at all-time highs is dirt cheap. I think silver at what 50% of all, 60% of all-time highs right now is even cheaper. But the Western investors aren't in this. They're actually selling gold to cover bills, to pay credit card debt down. And we're seeing Eastern buyers and central banks are what's supporting this rally in gold and silver.
Yeah, so let's talk about that because we actually talked about that on our live episode on Friday, 2 weeks ago, where we showed a chart of gold going all-time highs, and yet we showed the amount of investors in gold ETFs was shrinking.
Going
It's
backwards.
going down for like a while, like
Yes.
2018 or something. It was crazy. Maybe it was more than that. But what's going on there? Like, what are the dynamics underpinning the gold market right now?
Well, we've 28 years I've been doing this. I've heard them talk for 28 years about the transfer of real wealth. In this case, we're talking gold, from west to east. And I've never seen it in my 28 years more pronounced than what I'm seeing right now. And you can see it. You can hear that giant sucking sound as gold is leaving ETFs. It's not doing it in a small way, it's doing it in a big way. And then it's being snatched up by a combination of central banks and retail Asian investors. The East is buying the gold up. And you can see that further if you look at the premiums, and I don't know them off the top of my head, but the premiums have been climbing for the past year or two on the Shanghai Gold Exchange, where they're willing on that exchange to pay a premium for gold over what people are paying for on, say, the London Exchange. So it's clearly the appetite for gold is in the East, not in the West. Part of the central bank buying, which has been off the charts. 3 years ago, central bank buying was the most we've seen in 60 years since they started recording it. 2 years ago, we just missed that by about 4%. And the start of this year, we're on pace to outpace last year. So central banks are doing it clearly because they're concerned about the dollar in reserves. They're shedding dollar reserves for gold, another tier one asset that nobody manages and by the same token, nobody mismanages and certainly doesn't weaponize like we're seeing with the US dollar.
Yeah, so you mentioned the kind of the sucking sound of money going from west to east, but is part of that wealth transfer, or is part of that just people in the West don't view gold in the same way that other cultures do,
Clearly.
right? And we, you and I were on a debate in a conference a few years ago, and we certainly debate on this podcast. And culturally, gold has been a strong cultural underpinning of places like China, India, and 1990s rappers, right?
Yeah.
Like there's like a
Gotta throw
certain
them in. We'll
I
stop
got
that.
to throw that in there. Yeah. It's but the reality is like this is like hundreds, thousands of years a part of their culture, whereas it's not really a part of ours. It is sort of in terms of jewelry, but it's not like India. Like people wear their wealth on, like the women wear their wealth on their body in gold, right?
Yep,
People don't do that here in the same respect. So is
true.
it just a cultural thing, or is it really like wealth transfer?
I think it's more wealth transfer at this point. I mean, the bottom line is, you know, gold has always had a following when it's been needed, right? So a lot of the countries or the areas of this world geographically that you mentioned, they wear their wealth because they don't trust governments, they don't trust banks. They've seen banks fail, they've seen governments overrun. So where do you go when you want to tap into your wealth? When all of a sudden they're gone. So they tend to wear their wealth so they have it under their control at all times. That's kind of where that comes from. If you ask Westerners, to put 10% of their net worth into gold for insurance, they say, how come so much? You ask the same question in Asia, and they say, why so little? So it is partly cultural, but I think now we're starting to see folks. Well, let me take it back a step. Even in the West, when it's needed, gold is demanded and wanted. A great example, I've used this in the past, is look at any time we've seen a serious downturn in the stock market, right? So AIG, Bear Stearns failing, what have you. The stocks plummet. At the same time, gold and silver plummet as well. And that's primarily because what people are doing is they have to meet a margin call, right? They're leveraged in their accounts. They borrowed money to buy more stock. The stock went south, and now they have a margin call. Where are they going to go for liquidity to go ahead and meet that margin call? They sell gold and silver, some of the most liquid assets on this earth, first when they need it. And then bargain hunters jump in and start buying right away, and gold and silver recover much quicker than the broader stock market would. So, we see it everywhere. Gold is absolutely the safe haven choice. You see conflicts escalate around the world, geopolitical issues. Gold tends to be bought. The price tends to move up in times like that as well.
So I've followed the gold market not as long as you, obviously, but for most of my career, and I've always been fascinated with it. And there's always these things that don't make sense.
Mm,
So, for example, in 2020, when everyone's stuck in their home,
yep.
um, gold price dropped. Not a lot, but it dropped a little bit. Yet you couldn't find gold to buy. You went to a dealer, they were fresh
Yeah.
out of coins, they're fresh out of bars, everything. Like I was like they couldn't mint it, right? Because they couldn't mine it, they couldn't mint it because everyone's stuck in their home. It was just everything sold out. So naturally,
Or they couldn't get it to them because of the supply disruption.
right, but
Yeah.
naturally supply and demand. There's no supply, demand's through the roof. The price should have gone through the roof, yet the price declined. What happened there, and why didn't that reflect in the public price everyone else saw?
Well, I think the biggest reason is we paid people to stay home. you know, they got money from the government or from elsewhere for their business personally, not to work in many cases, and they use that money primarily to pay down debt at that point, which is everything I read is what that money went toward, and maybe a little bit of speculative investing. There was a period there where gold did pop a little bit as a reaction to the safe haven news. But in terms of the fabricated supply, There's no question. The industry is kind of a slow moving vehicle, right? So if for years the metal is stuck at a price, there's not a lot of demand. People believe in paper assets and dollars, and they're buying less fabricated coins and bars. The mints don't make a ton. There's no reason to have a huge inventory if nobody wants it, right? And then all of a sudden, there's some sort of stressor. It could be COVID. It could be, Russia invading Ukraine. It could be a whole number of things that all of a sudden people now want coins and bars. There's just not a lot of them around, so premiums go through the roof, prices skyrocket. That's how markets deal with excess demand and limited supply. But eventually, the industry corrects that. And in the market we're in right now, because we're seeing a lot of central bank buying as opposed to Western investor buying, we still haven't seen the premiums climb for investor grade bullion coins and bars, which means right now, if you buy my theory that gold is dirt cheap, silver's cheaper, and the premiums are low, you got two great opportunities to pick some up cheaper than you probably will in the future. So,
Well, Rich isn't going to say it, so I am. And for those of you audio listeners, you're going to miss out on my tinfoil hat I just put on. So, Rich, I'm going to ask you again.
yeah,
You don't have to answer it, but to me, there's the gold market, which to me seems like if you can't find it, people would overpay for something they demand. The price should have shot up. Every other commodity did. Lumber went through the roof 3 times because they couldn't get it and they had
couldn't
to
get it.
work through
Yeah,
that. Gold, you couldn't get it, yet the price went down. To me, that seems like and I'm putting my tinfoil hat on, that is a managed price. It has to be managed because otherwise, why would anybody? I mean, if it's going down, everybody wants it. If I was a seller of gold, I'm not saying you do this because I know you're a reputable guy. Like, I would just say, well, we don't have any. We got to pay more. And the price naturally would rise, yet it didn't. And this has always been my question of the gold market. To me, it feels managed. It doesn't ebb and flow with the supply and demand dynamics because if it did, then A, the price wouldn't have went down. That to me alone is just like, what the heck is going on here? But I can understand. But if you can't get the physical, but you can get all the paper you want, to me, that seems like a managed price. So I don't know if you don't have a theory on this, that's okay, because the gold market is so highly complicated.
yeah.
I just wanted to pose it as a question because it's always been a question in the back of my mind.
Well, I'll give you two quick thoughts. First off, that a lot of people that are comfortable with paper wealth, right? So buying things in the stock market, bond market, et cetera, are comfortable buying gold and ETFs. And they could buy that, didn't have to wait for delivery. They didn't need the physical coins and bars. So that was available to them. So there could still be some buying. In terms of managed, or, I like to call it something different, manipulated markets. I personally believe every market's manipulated to one extent or another. I think the biggest market manipulators out there, period, are the Fed. That people all over the world hang on their every word to see where markets are going to go. Gold moves up and down, not because of supply demand. A lot of time, it's because what they think Jerome Powell's going to do, for God's sakes. And that's crazy to me. But every market is manipulated to some extent or another. I can't prove it, so I'm not going to walk down the path and say this guy, that guy, and the other guy are the ones doing it, and here's why. But I do think there's some manipulation everywhere. No two ways about it. Some of it is just propitious trading. I mean, if you're a bullion bank and you know where all the sell stops are, and you could push that market a little bit over the edge, and all of a sudden they're triggered, and then you can buy in later with the market price a lot cheaper. It's hard to resist that temptation.
Yeah, no, I get that. I mean, I think it's easy to put on the tinfoil hat and point fingers and say this person, that person, but in reality, no single person is doing it. It's kind of it's probably more of a collective of people who are in the market. I mean, they used to have the gold pool. They had all these. I mean, historically, it's been managed. And that's kind of where I'm going. And people don't realize historically it's been managed.
Fix the price
Um,
daily. Yeah.
Openly, like
Yeah.
openly managed, right? It's not like it's a secret, like it's been
Yep.
open. But didn't the gold pool, didn't that fold? Is that still a thing?
It didn't fold. Some of the players in it were doing the wrong things. They stepped out of the market and others stepped
Okay.
in, but they still fixed the price daily. So
Okay. All right. So that's still a thing. All right. So let's pivot quickly. We're going to come back to gold, but I am curious because, you know, people like precious metals. because of the storage of wealth. You mentioned gold, you mentioned silver, but platinum and palladium have always been this. I think of them as the redheaded stepchild. Not everybody does, but I think of them. Like palladium, I don't even know why that's in the picture, but it's worth something, but it hasn't been doing well in the last few years. Platinum's been stagnant, and platinum's always been this, oh, it's better than gold. Like it's this,
For the past several years.
it's not been my thing. It's like I wouldn't get a platinum wedding band. Like I don't see that as
I
like
did.
gold. I have gold. Like,
I had
like
platinum.
okay. I mean, it's a preference, right? And I'm not
Yeah.
knocking people who do because some people get like titanium. But anyway, my point is that when you're looking at platinum, you'd think it should mirror the direction of gold and silver, yet it's kind of been stagnant. Like what's going on in the platinum palladium markets?
So they're not monetary metals. So they don't mirror gold. They could follow gold a little bit if commodities in general, right, are moving up like now. But they don't follow gold for because gold is a monetary metal primarily. Platinum and palladium are industrial, flat out. They're bought for the jewelry industry. They're bought for catalytic converters, are probably the biggest need, whether it be for what do you call it? uh, gas engines or diesel engines, right? Depending which metal you use. So both those metals are used there. They're driven by supply and demand fundamentals out of the two countries that produce most of them for the world, which are Russia and South Africa. So the supply base is not the most uh, I guess, dependable at this point in time or really ever. So there are some issues with platinum and palladium, but they're metals that are needed because of their high melting points. And that's what people buy it for, usually jewelry and autocatalytic converters. Gold and silver are different. They're monetary metals. Gold, primarily monetary, secondary and to a smaller extent industrial. Silver, primarily industrial, but it's the poor man's gold, and it's also been a monetary metal over the years. So they march to the beat of a different drum, in my opinion. And in this current environment, I think this is gold and silver's time, not platinum and palladium's time.
Okay, that's good insight. So let's talk a little bit about silver because silver's always been uh people love silver.
Yeah,
Like it's just
it's
it's talked
affordable.
about. I mean, people love gold, but people love silver. It's like, wow, silver, there's so much opportunity. It's always this like, there's the huge opportunity in silver that's never seems to be realized.
No,
What's
that's
going
not
on
true.
in the silver market in that it doesn't really keep up with where the fundamentals should lead it to?
Well, it again, it's primarily industrial, but it's also monetary. And the relationship between gold and silver is an interesting one. Gold goes first. If we're turning from a bull market to a bear market, gold makes that turn first, starts heading down. Silver will follow, and eventually will outpace gold to the downside, right? If we're turning from bear market to bull market, gold will go first, establish the trend. Silver will follow and tends to outpace gold. So it has performed and it has outpaced gold. If you look at the two bull market rallies we've had in gold and silver since we came off of the gold window, since the gold window was closed and dollars were no longer exchanged freely for gold. That happened August 15th of 1971 under Nixon. Since that time, we've had two rallies. The last one, for example, gold was up 650% in 10 years from 2001 to 2011. Same time period, silver was up over 1,000%. Okay, so that narrative is true, and we have seen it. Same thing happened 1971 or so to 80. Okay, the first rally. Um, right now, we're seeing the breakout in gold, and silver started this year to outpace. I think gold is up, what, about 13% so far this year? Silver's up about 30 some odd. Okay, so we're starting to see that play out. Why does that happen? Well, the silver market is a much smaller market than the gold market, dollar wise. So when you plunk 100K into gold market, 100K into silver market, it makes a bigger splash, and the silver market has a bigger impact on the price. Same thing when you pull it out, right? So I liken it to throwing a stone into a lake versus a puddle. Puddle is going to have a bigger relative impact, and that's your silver market. silver is really interesting right now because it did dip deeper than gold in the bear market, and we would expect it for a third time running to outpace gold to the upside. We saw about, I'm going to get my math off here, but it's either 10 or 11 years of surplus production of silver, right? And then the past 2 years, we saw a deficit production of silver, and those 2 years washed away 11 years of surplus that quickly. And we're going to see more demand for silver going forward because it's preferred metal in a lot of green technologies, solar panels, et cetera. So you're going to see demand kick up for silver as we see the supply demand equation already getting better. And let's face it, as gold price moves higher, people look at the poor man's gold, silver, and they say, okay, I want to participate in that sector. I don't want to plunk down $2,300 for an ounce of gold, but I can certainly plunk down $30 for an ounce of silver. So you'll see a bit of that as well.
Okay. So silver is not a central bank precious metal, gold is. But let's talk about central banks for a minute, because for a long time now, central banks have been buying gold.
Yeah.
What's going on in the central bank world with gold? Because the U.S. generally doesn't. But how do those dynamics play out, and is that driving a good part of the gold market, or what are the activities going on in the central bank world?
Yeah, I think a lot of this goes back to weaponization of the US dollar. So the sanctions on Russia has caused not just Russia, but a lot of other nations to go ahead and start shedding dollar reserves for gold reserves as a tier one asset. And you say, well, why are they doing that? Why would a friendly nation shed dollars for gold? And they're basically, think about it. You know, we have taken the international money markets and cut Russia off from them, or at least tried to, right? And our friends, clearly our enemies get that message. We don't want them playing in the sandbox if they can't play nice. But our friends are looking at that and saying, I'm on the good side of the ledger. The US likes me right now. What if I do something and they no longer like me? Are they going to cut me off as well? I need an exit plan. I need a plan B, C, or D. So we're seeing them shed dollars for gold in their reserve assets. And that trend I don't think is going to stop. One, because we've weaponized the dollar. Two, because we have dysfunction with the purse strings in Congress. And three, we have a debt that's overhanging. So, you know, you're, I guess you have to look at the claim on the asset versus the asset. So, I can hold a bond, right? And I could say, okay, that's all right. The US is good for it. If for some reason they can't come up with the cash, they can tax their citizens, they can nationalize assets, they can do this, that, the other. And that's okay until people don't believe they're going to do that. They're not going to go that far with taxes. They're not going to go that far with nationalization. Now it's just a bad investment, right? And I think we're starting to see some of that as well. Whereas gold has stored purchasing power over the years, the dollar has not, because we've mismanaged it to a worth less dollar. Not completely worthless, but worth less for sure.
Yeah, it's interesting. I mean, with the amount of, and here's something that's always been curious to me, is the amount of money we printed,
Yep.
right? We have what, $35 trillion in debt,
Yep.
not including all the entitlements and all the
Yeah.
other.
Don't even go
I
there.
mean,
This is just bad
it's
enough, right?
crazy, right? So we're looking at $100 trillion. I mean, it's just crazy numbers. Why isn't gold going that much higher? Like you'd think, like we've gone from, what was it, like a few trillion up to 35 in a relatively short period of time, like, and gold hasn't kept up with the amount of money printing going on. So why is it not kind of mirroring it one for one, and how would you kind of read into that? How should people be thinking about this? Because if they're basically printing $1 trillion every 90 days or less,
Yeah.
I know gold's trending up, but like, can you talk a little bit about that historically and how
I
that's
think
kind of really kept pace?
Yeah, I think a little bit is just ignorance. I don't think people get the relationship between debt, currency, gold, et cetera. I think, and I don't want to call everybody out. I think people listen to your podcast certainly understand it. You've covered the subject ad
They're
infinitum for
wicked
years.
smart.
Yeah, exactly. They're wicked smart. So, but I think for the most part, people don't understand that really. There was a video actually. I don't even talk about most people and the general people. There was a video out. I think it's still up on X or Twitter. Everybody else has taken it down. Of the senior economic advisor to President Biden asked, how do we, uh, why do we why do we print up currency to pay for debt or something like that? We created. He couldn't answer it. He had no earthly clue. And this is the senior economic advisor to the president, doesn't know how money, debt, and everything else works. Yeah, I think there's some ignorance involved here. There's no two ways about it. But part two is I don't think it's a one-on-one, direct relationship. I think as people lose faith in dollars, they tend to gain faith in real assets. And I think that is unfolding before your eyes, maybe to a much greater extent in Asia than it is in the West right now. But I do think it's unfolding before our eyes.
Okay. Well, it's good, good insight there. And hopefully directionally uh, it sounds like we got some catch up to do
We
over the
do,
few
and I'll
months.
just add this, Kirk. The bottom line is when you look at gold, and I've heard this a lot over the past few years, gold is not doing its job, right? It's not doing its job. It's not keeping up. I don't believe in it. Back up. Don't get lost in day to day. Look at the 100-year gold chart measured in dollars, right? And then tell me that gold's not doing its job, right? It is absolutely holding purchasing power as dollars lose purchasing power. That's its purpose in life. And it does that really well, and it has for decades.
Yeah, and it's a good and this kind of brings in obviously the obvious elephant in the room, which is inflation. And I've gone back and I'm a student of history. I know you are too. And I've gone back and looked in the last 100 or so years in this country and seen what's happened in certain time periods. And we have had inflationary periods in the past, and maybe none that'll completely destroy the currency somewhat recently, but if you go back far enough, you will. But if you look at inflation, you see what the Fed's doing, you see interest rates, you see, the inflationary pressures. Um, I'm always curious what kind of assets are going to work well in certain areas, right? Because some
Yeah,
people are talking about the Great Reset, which we don't have to necessarily go down that rabbit hole, um, but there's obviously a conclusion to this monetary experiment that we're experiencing, and you know, directionally we're not going in the right direction.
I think we can all agree on that for sure. Yeah.
So, what are some natural outcomes of this? Because yeah, gold price goes up. It's like investing in Bitcoin. I know you love Bitcoin, Rich. So,
I do actually. Kirk, I bought it at 2,300. How can I be upset with it at 70 or whatever?
that's true. That's true. I'm pulling your leg a little bit, but
I
but
just
but
don't believe it's the new gold. Not yet.
no, I agree. It's a good speculative asset. But
Yeah,
the point is, if you look at a Bitcoin, it says, all right, it's people are speculating in it. You could argue that, well, it's going up because of inflation, whatever. I'm not going to get to the bottom of that argument today. But um, the culmination of where things go is kind of where I'm going. Like,
yeah.
if the U.S. eventually defaults on its debt, if the U.S. has to reset the monetary system, because actually I just saw some news I wasn't aware of that our agreement with Saudi Arabia
Petrodollar's
expired.
gone by the wayside. Yep.
Yeah, it expired.
Yeah.
And
Done.
why is that not front page news? That is the whole stability of the last 50 years disappeared.
Yeah. Throw in that the BRICS and what they're talking about, although they're not all together on those things. You throw in what the past week or so, Russia shut down all their exchanges. They're not settling in dollars anymore. They're settling in yuan. I mean, this is not a slippery slope that ends toward dollar supremacy. That's for damn sure.
No, and that's really where my question is going is, so all of these pieces of the puzzle, which seem to be lining up in the last 4 years, frankly,
Yep.
um, don't want to pin it all on Biden, but it's, it started with it started before Trump, and Trump was a part of it too, where they had the deglobalization, right? We had a globalization for many years. Now we have a deglobalization. Started before Trump. Trump did a great job at poking his finger in the eye of globalization and sped up the deglobalization.
Any bear
And
he could find, he poked. Yeah,
yeah, he poked every bear. And he didn't poke the Russian bear though. Biden did
yeah,
that.
exactly.
Supposedly,
That's Act Two. Yeah.
yeah, yeah. Putin did it, right?
Hmm.
But the point is this has been a large trend, right? It's
Yeah.
not one person, and
True.
I say this in jest. We're not pinning it all on Biden or on Trump. It's a long trend that's been happening.
Agreed.
So as the world's changing, right? We've deglobalized. It's getting more expensive here. The petrodollar, like, how do you see that culminating? Because it's not these changes are big, but they're not immediate. Like, it's not like Saudi Arabia's gonna be like, all right, no more dollars. Like, they still have all their stuff in dollars. There's still
Yeah.
intermingling. It's like, how do you see all this playing
And
out?
replace it with what? That's the big
Exactly.
thing, Kirk. What the hell are you going to replace it with? Where people worldwide have faith in the currency, et cetera. There's no question. We've been talking about how the world is losing faith in the dollar, but there's not enough faith built up anywhere else to make a switch, in my personal opinion. Okay. So yeah, I do not think this is imminent. A lot of people do. I do not. And I think, if we continue down this road, that's the inevitable conclusion, that the dollar will no longer be the world's reserve currency. What it's replaced with, I don't know. I don't think it's yuan. It could be a basket of commodities and currencies. It could be a whole bunch of different things. But I do think we're heading that direction. And the big thing you have to ask yourself is, what does the world look like when and if that happens? And I'm a long-term believer that the biggest impact for Americans is our quality of life will be drastically reduced. Okay. The way we live, the things we take for granted that other nations in the world just flat out don't have been financed by the rest of the world holding on to our debt instruments, and they're getting tired of it because we're not managing that well. So, we're not the first currency in the world, or empire, if you will, in the world to have reserve currency status. The last one that we supplanted was the Great Britain and the pound sterling. Okay. They're still around. You know, I can't say that you would argue that their standard of living is as good as it was when they were the cock of the roost, if you will, right? So that's what's going to happen. Our standard of living will go down. The folks that will be protected from that demise in a standard of living are folks that have exchanged ahead of time real assets for claim on real assets. I think that's how you protect yourself. And I'm not saying sell 100% of your portfolio and buy gold. That I never ever would recommend something like that. But if you don't have an allocation to gold, I think you're making a mistake. And if you haven't increased it now versus say 20 years ago, I think you might be making a mistake.
Yeah, no, I think we can agree on that. As you were saying, it's imminent, not immediate,
Yeah.
but it's eventual,
Well,
right?
everybody says
Like,
the BRICS is happening like immediately. They're meeting this past summer. They can't agree on the sky's blue, so they're a long way off. But it's a lot of pooled GDP to compete against the dollar and the U.S. If they ever do get their act together, for sure.
yeah, I think the challenge is when the U.S. hegemon is challenged. Like, what does that turn into? I mean, I know with Great Britain, we were the natural country to uptake that, but there is no other country. People say China, but the reason people still use the dollar is because we have the deepest, most liquid markets
Of course.
and currencies, and
Yep.
people don't trust China. Like, you could say they have a good economy. I'm not going to characterize their country. I've never been there. But I can say that it's not as trustworthy. And I could also say we're not trustworthy.
I was
But
just going to say that's part of the problem. That's why we
right,
see the tide changing, because people are saying, "Wait a second, do I really trust them?"
right. And that's happened
Yeah.
over the last 100 years, right? We went off the gold standard and then every little bit, little by little.
Yeah.
I'm always very curious. I mean, you and I talk about this offline a lot, but like what that turns into when there's no US dollar. Like what is because it can't be currency, it can't be commodities because those can be easily manipulated, and that's going to be a mess. Like oil, really, you're going to give all the power to the to the OPEC
The oil
countries?
producing
Yeah,
companies
that's not going
or
to happen.
countries.
We're never going to agree to that.
No, so here's what I think, and I don't know. I think it's got to be a mix at this point. There is no front runner, no contender, unless we have, God forbid, a third world war and somebody is the victor and they dictate terms to the rest of the globe. I don't see it being any one currency. I do think it can be a mix, like kind of like the idea of the special drawing rights or whatever, where you have a mix of currencies and potentially a mix of commodities. And you say, well, the dollar can still be the primary currency in that basket, right? But let's say now it's only 60, 70, 80%. That's a, 40, 30, or 20% cut to the dollar in terms of world reserve purchasing power. So, it could have a serious impact, and it doesn't have to be much. I think that right now that's the most obvious or potential practical choice, but I really don't know.
Yeah,
Your
it's
head
just
can spin trying to think about stuff like that.
yeah, and it's always an interesting. I mean, I always like to think about these things because it gets your head in the right place of like how the world works. And I think about like how do they do it by GDP? Well, what's 40% of our GDP is from the government. So
That's an
how
issue too.
accurate is a
That's not
GDP
productive
measure?
GDP, if you ask me, right?
Right, you just overspend for stuff, so it's not really productive. Cool. So let me ask you this. So how should people be looking at adding gold and silver to their portfolio? Because we have people calling us all the time. I want to put 100% of my retirement account into gold. Like,
No, not
no,
ever. Not
sorry,
ever.
that's
No.
terrible. Even Rich, who sells gold, is saying don't
Exactly.
ever do that.
Not ever.
So if you're listening to the show, don't do that. But how should they look at their allocation? Do you have some historical context? Like, how should people be thinking about it?
Yeah, so here, a little slippery slope. I'm not an investment advisor. I'm not an asset manager. I can't give you advice, and certainly not personalized advice. What I can do is tell you what I do. This has worked pretty well for me over the years. I like my results, and I've never had a point where I didn't have the means to deal with a need, right? So I'm a firm believer you ought to have 10% of net worth in gold. That's wealth insurance to me. So by definition, that's a store of purchasing power with high liquidity for a potential financial crisis you hope to never have. If you have a crisis, you sell it immediately, meet your need, and then as quickly as possible thereafter, you try to replenish the need. But you don't hesitate. If you have an emergency, you meet it. That's what the gold is for. It's what I said happened with like margin calls with AIG, Bear Stearns, whatever the need. It could be medical, it could be financial, it could be what have you. You meet that need and then you replenish afterward. Um, in an environment like this, where, like I said, I believe gold is dirt cheap, silver's cheaper, I actually like the profit potential um, in gold, but primarily in silver here. And that's where a lot of people talk about the potential because it dips further to the downside. It tends to rise further to the upside. Here, I like another 10 to 15%, not of net worth, but just investable assets in precious metals. So at my most bullish, I have less than 20, 25% of my assets in precious metals. And I treat the for profit assets very differently than the net worth. Net worth, I never sell unless I need it. The for profit stuff I manage with the rest of my portfolio. So if I allocate, 5%, 10%, whatever the number, and it doubles, sell half. Sell half, take your profits, put it in some other sector. If it goes up or if it goes down in price, buy a little bit more. If you're buying all along the way in a bull market, right, you're taking profits as well all along the way. If you manage that, buy a little more, sell a little, buy a little, sell a little, and you can make money. And if you do that, you never ever give a damn where the top is and missing it because you're taking profits all along. The big thing is, when do you know if it's a dip in a bull market or if it's the turn to a bear market? And there's just some indicators. You look at the duration of the bull market; they tend to be long, 10+ years for precious metals. You look at the price of gold. I like 2 to 3 times previous highs. Previous bull market high was 1900, so you're looking 38 to $4,700 somewhere in there. You need to look at sentiment, right? If peace is breaking out all over the globe, which it's not. If
No, it's not.
social rest is breaking out all over the globe, and it's not.
It's not.
Maybe it's time to turn away from gold. If you've heard this before, but if your Uber driver is telling you how much money he made in the silver market, maybe it's time to get the hell out. You know, things like this. Interest rates are another big one. If they're well, well above where we are now, we're not talking 5%, we're talking near double digits, and well above inflation. If you can get that kind of return on a safe deposit, right, then why would you need gold, right? So uh, any one of these things could be the trigger or the sign that we're turning in the market, but not by themselves. I think you know, got to see two, three, four of them come together, and then you start thinking maybe I need to not buy more on the dip, but maybe I need to start taking my ultimate profits here in my profit position. But the insurance metal, I never touch unless I have to. I don't know if that helps. That's what I do.
No, that's great. I think that's good insight. That's what we're looking for. Obviously, we can't give investment advice. I can't even do that to the public because everybody's different, so it's not
Exactly,
appropriate.
exactly.
But I think in terms of parameters, I think it's a good way to think about it. So, all right, so we're going to wrap it up here in the interest of time. Love to talk to you forever, Rich, but we got to wrap it up here. So, what are some final thoughts, and where can people find more about you?
Okay, so final thoughts. You know, I said it earlier. I think we're seeing the biggest transfer of wealth, real wealth, gold from west to east in my lifetime. I think part of it is coming from the fact that the dollar's mismanaged. And you know, everybody's looking to the Fed for answers: cut rates, raise rates, leave rates alone. You understand this: Fed can't do a thing about this mess. This was created, like you said, uh, by both sides of the aisle over decades, right? So until we have a Congress that has an appetite to balance a budget and actually generate a surplus and pay down debt, the dollar's not going to increase its standing in the eyes of the world. So it starts with Congress, not with the Fed. The Fed cannot do a thing about this mess except trying to minimize the damage and push the pain out further in the future to future generations. How do you protect yourself? I do what the central banks are doing right now. I would become your own central bank. Hold that gold for wealth insurance, hold some silver for profit. The way to reach me, you can call us toll free, 800 831 0007. That's 10 better than James Bond, by the way. Or you can reach out via email, info ASI at assetstrategies.com.
Nice. Well, Rich, I really appreciate you coming on the show. Those of you who know me, I'm very particular about people I recommend, and there are a lot of shysters in the gold coin market. Rich is the only guy I trust. I know Rich is an honest guy. He's a straight shooter, and we live in a world where there aren't many of those. So that's why I bring him on the show, so he could teach us all a lot about his world and what we can learn from it. So, Rich, always appreciate you coming on the show. We'll definitely have you back on again.
Thanks for having me. It's my pleasure.
Hey, Doug, did you hear? We're giving away free money. Well, I'll tell you about it in a minute, but before I do, there's a saying in the mining community, well, precious metals mining, that is. The saying is that if you want the best deals, you have to be in the room. Now, you're probably thinking, what does it mean to be in the room? Well, I'll tell you. Being in the room means that you're on the short list of people who get invited to be a part of the best deals. These are the deals that most investors will never have access to. You mean like IPOs? Nope, IPOs are chump change. Those are for retail investors, small potatoes. That's nothing compared to these deals. These deals would have you salivating to get access to them. Once you know they exist, you will never look at investing the same way again. I almost don't want to even tell you that they exist because it will ruin your thinking of how the investing world really works. Now, you might be excited that these deals exist, but you only have access to the deals if you're an insider, or in the room as they call it. Now, as loyal listeners to the show, I'm going to give you a chance to be in the room. Money Tree Investing Podcast has created the Insiders Club. This is a community of our show's members who are loyal listeners of the show and want to get more out of their investing experience. Being a part of the Insiders Club gives you insider status for upcoming events and webinars, discounts, free stuff and books, and influence on the future direction of the show. This is a great opportunity to join us as we expand our content and services. Oh, and did I mention free money? Yes, in the next few weeks, I'll be giving away free money to our members of the Insiders Club as my appreciation for listening to the show. Now, there's no cost to join the Insiders Club. Just go to moneytreepodcast.com/free money today to join the community. That's www.moneytreepodcast.com/free money. I hope to see you in the room.
All right. Well, that was a great interview with Rich. Always appreciated him coming on the show. Rich is I think he's got a three-peat on the show. I think it's the third time he's been on. So thank you, Rich, for sharing your wisdom with us. Now we're into the panel portion of the show where we have our very own Barb Freeberg. Hey, Barb.
Hi, happy to be here. Talk about gold. Love
Yeah.
my gold.
Ditto. Love my, sorry, wrong hand. Love my gold. All right. So Phil, what about you? Welcome to the show. Good to have you on this week, Phil.
Good to be here, Kirk. Thanks for having me. And I guess I should show my gold too.
Yes. Yes, we're in the club. All right. So Barb, what are your thoughts about gold and not the stuff around your wrist, although you could include that as well?
I love gold jewelry. But that's where it ends. Okay. Gold as an asset class, it's been around for millennia and it has been valued. It has been used as money. It can be converted into cash relatively easily. So there are benefits to gold. Gold as an investment does not pay dividends, and you are dependent on the up and down movements in price to determine what the value of your gold is going to be. Now, a lot of people are kind of scared of what's going to happen in the world, and the world's going to come to an end, or there'll be a civil war, or all those scary things. And, gold is universally accepted as valuable. So in that sense, if you're worried about those things, well, yeah, you might want to own some gold. But, and I have a price chart in front of me, which you can't see. Today, gold is at a high of $23.92 per ounce, which is the highest that it has been since September 1993. So awesome, September 1993. If you bought gold an ounce then, it was $364. But the problem was, if you bought it in 1993 and held it through September 2004, you gained $40. So it was $405 in September 2004. So pull up a chart on your own computer and you'll see it's kind of, it goes up and it goes down, but there are long periods of time where it is very, very stable. So I think of gold as, if you want to invest in it, think about a small percentage of your portfolio, but you're not going to get dividends. And unlike stocks and bonds or stocks per se, which represent global U.S. and international companies, in general, companies go up in value. Gold goes up and down.
Great. Phil, what are your thoughts on gold?
I admit I'm not a big person in investing in gold either. I think of it as not providing me a source of income, like Barb said. The market sets the value, like traders and the commodities market set the value. It goes up and down. People have it as a hedge against inflation. Some people have it in the event of a disaster kind of thing. I just don't think that gold needs to be a big part of a portfolio. It's not the type of investment that I normally think of making. It's fine. Gold jewelry is fine. I have no problem with that. But I don't think of it as something that I want to take up a big role in my portfolio. It's just, if I was going to own it, though, I would own the gold itself as opposed to a miner, because if you look at the performance of the gold miners, their stocks are probably even worse than what Barb laid out for gold itself. So I would own gold. And honestly, people are interested in it. You can go to Costco and you can buy gold and they sell out. Like I think it's you buy it like an ounce. You can buy, I guess it must be a coin if it's an ounce, but you can buy an ounce of gold from Costco, and they have sold out a couple times when I've seen that they don't have any. So people definitely want to buy it, and there are people that want to hold it. Like I said, usually it's to protect against disaster, worries about inflation, things like that. It's a hard asset as opposed to other things, so that gives it a little bit of difference. I mean, you can diversify it and put it in your portfolio, but if you did, I wouldn't put a big piece of it in it.
Heresy, both of you, witches, burn them. They turned me into a newt. No, in all seriousness, I mean, the thing about gold is, it's one of these things that elicits a lot of emotion. And on both sides, there are people who say it's useless, a barbarous relic, or Warren Buffett, who says it's useless because it can fit in a swimming pool. All the world's gold can fit into a swimming pool, and it will earn you nothing. I get it, but yet he bought silver in 2001, so it wasn't, or maybe it was 97, so it wasn't all that bad. But I think the thing is to realize about gold is it has a purpose, right? Why do you have it in your portfolio? Now, I personally love gold. I think for its purpose, there's not much that's better than gold for the purpose that you would buy it for. Problem is, people are buying it for different purposes. So if people are buying gold because they want it to go up, that's not its purpose. It's not there to go up in value. It's there to hedge against inflation. And it's not going to hedge against inflation on a day-to-day basis or weekly or monthly basis. It is going to do it over long periods of time. So you don't buy gold so you can sell it next week. If you're speculating, that's fine. That's on you. But you're buying gold so that you can keep it for long periods of time and hand it down to your kids. And if it's a true emergency, you'll be able to use it. Now, here are the things it's not good for. It's not good for the zombie apocalypse. Okay, so if you go to the deep end of the spectrums, you got utopia where everything's perfect. Adam and Eve are sitting in the garden, kind of perfect, and there's nothing wrong with the world. You don't need gold. And if you're on the other end of the spectrum, the zombie apocalypse, where people are eating each other in the streets and beating each other with baseball bats, that's not going to help you with gold either, right? And I think the challenge is most people are either they think about utopia or they think about apocalypse porn, and they just think that, well, I'm going to be ready and everyone else isn't, and I'm going to be special. I'm going to have my MREs, my guns, and my gold. The problem is if we get into a zombie apocalypse, none of that's going to do you any good. Well, maybe the guns will, but you're not going to do very good with gold. Now, if you're in the middle, I mean, gold is a chaos hedge. The whole goal is it's a hedge against chaos. So if the US dollar blows up, which I'm not sure it's going to crash, but I do see it in the next 10 years, it's going to be different. And I do think, given all the macroeconomic stuff going on, the US dollar will no longer be the global reserve currency at some point in the relatively near future. Not tomorrow, not next week, maybe 10 years from now, 5 years from now, 20 years from now, but it's going to happen. So I'm not worried about that today, but I am worried about it 5, 10, 15, 20 years from now. So if you are worried about that, gold is a good hedge against that fear. Now, should you put all your money in gold? No. That's not a chaos hedge. Now, if you're afraid of this happening tomorrow, then you might want to do that. The problem is you don't know when it's going to happen. It's just going to happen. It's not going to be, you're going to wake up one morning and they're like, all right, we devalued the dollar by 50%. It's too late, right? But if you're thinking, well, I'm going to get ahead of that, you could also lose out for the next 20 years where the stock market goes up 500% and you're up 10%. Now, your gold might be still worth something after that event, but we don't know what's going to happen. We don't know how it's going to happen. We don't know what's going to happen. We don't know the outcome. The value of gold is it's a diversifier. It's relatively low correlation to the markets in comparison to what else is out there. It will always be around. It has been for thousands of years, so I don't see any reason for that to change. And if you think about gold, it's in its purpose, yeah, you can make money with it, but you shouldn't look at it from that lens. Like I get calls from people, they say, oh, we should put 100% of our retirement account into gold. I'm like, no, don't do that. Like, I mean, you have to think about gold for the purpose that it's in, not It's not for speculation. It's not for growth. And it's not for the end of the world, because that would be useless at that point. It's really for the chaos in the country, like places like Argentina, right? That frequently have currency problems, right? And if you think of these countries that have currency problems or have over time, Venezuela is having currency problems. A lot of countries are having currency problems. Gold is a good protection against that because people will value gold, and it is liquid enough. The challenge is knowing when to move that around, because otherwise it could be static for 20 years and not make any money. And then of course it can go up a lot in a short period of time. So I think just understanding gold and how it operates and why you would invest is an important part of the process that people don't talk about. They just go all in. It's either all utopia or all dystopia, and there's nothing in the middle. And the reality is it's almost always going to be in the middle. So, and if it's not, what are we all doing? Who cares? You know, let's go eat brains. So, so Barb, how should people be applying this to their portfolio, if at all? I know you're not a proponent, but you have gold in your wrists, which means you like gold. So how should people be thinking about this in their portfolio?
Great gift. Do love to give and receive gold for a gift. The jewelry.
Barb, by the way, Barb, that's Barb's call out for all of you to send her jewelry. Those of you who love
Yes.
Barb, she's always
Yes.
open to taking gifts.
Yes, I don't mind any gifts in jewelry. So, but I was surprised. I have my workplace retirement account, my simple IRA, invested in the Schwab Intelligent Portfolios robo-advisor. And this is not a, you know, a pro or con. I'm not saying you should have that robo-advisor, you shouldn't. It's right for me. But I was really interested to notice that they had a small percent of the portfolio in a gold ETF. And I have never owned gold other than that. My dad owned gold for many years and it never moved. And ultimately he sold it and then it moved. So, there you go. Um, So if you want to own gold for the reasons pretty much that Kirk said, well, then think about having a small percent. And I'm all about protection. I have insurance for everything. I have a basement larder with 3 days of food and water, maybe 4 or 5 actually, for when we have the big earthquake in California, the big fire or whatever. Don't have a gun for the zombie apocalypse, but I got a good lock on my door, so maybe that'll help. But in terms of gold, I obviously don't have a lot, but if you want to invest a small portion of your portfolio in gold, it can't hurt. Don't expect it to go up and don't expect to get dividends from that gold that you own.
Great. Yeah, I'm pretty sure in some parts of the country the zombies will starve relatively quickly for the lack of brains. And you listeners can choose which part of the country you decide that is. I'll let you fill in the blanks. But anyway, so Phil, what about you? Is that something that I mean? I know some people are putting like 1%. I remember when I was at Payne Weber, they recommended 2.5%. I have actually a different percentage, but what are your thoughts? Is this something you would add, or what do you think the value is? Is it worth it?
As a general rule, I don't have it. Personally, I don't own any gold in my portfolio. I do have some clients that we have the conversation and we have the conversation about it. And I explain the fact that we can't expect big appreciation out of this. Hopefully we don't see big depreciation out of this. You're not going to get any income from it. If they want to put it in, we can talk about, including a 1% allocation, 2% tops. I wouldn't put more than that. But beyond that, I don't, it's just not something that I look to do. And I've seen some of the data that talks about like diversifying with gold or diversifying with commodities and what it does. In some cases it works, in some cases it doesn't. I'm not trying to protect against the zombie apocalypse, and like gold probably won't matter then anyway, right? And it can be there if it's right for you. I think that's really what it comes down to. If it's right for you based upon your level of worry, your level of concern. It can be in your portfolio and a small percentage to diversify, but beyond that, I don't put it in as a general rule.
Okay, good. So let's kind of wrap it up here in the interest of time, but final thoughts from you, Barb. Gold, precious metals, or kind of chaos protection. Any other thoughts?
I like the potential for growth and or dividends in my investment portfolio. And so gold, precious metals, commodities, I probably have some exposure to the commodities through my diversified US and international portfolio through some of the companies I'm invested in the index funds. I don't believe I have any precious metals other than that small gold allocation, but there's no rules in investing that apply unequivocally across the board to everyone. And so if you want to invest in a gold ETF or a precious metals ETF or buy some actual gold at Costco or at a dealer, look at the prices, look at the markup, and consider a small allocation. I wouldn't put a lot into your portfolio because, like I said, there's not a huge likelihood that you're going to get long-term appreciation and you will not get dividends. So you can find me, Barbara Friedberg, at Barbara Friedberg Personal Finance, as well as on my YouTube channel.
Thanks for coming on, Barb. Yeah, thanks for coming on. And Phil, final thoughts from you.
If it's right for you, if it makes you feel more comfortable, make a small allocation to gold in your portfolio. But if you want your portfolio to produce income, which especially as you get to retirement, that's really important. You're not going to get it from gold. If you're looking for big gains, you're probably not going to get that from gold either. So it's a personal choice. There's not one portfolio that's right for everybody. We all have our own levels of risk tolerance. We have our own views of the market. We have our own views of the world. If it makes sense for your portfolio, you can put a small allocation in it. And if it doesn't, you don't. But you should still have a diversified portfolio and take a long-term approach. It's just whether or not you want to include gold as part of that. That's a conversation that you can have and make a decision on. As for me, I know that experiencing big life transitions can be stressful. My job is to help empower women facing new beginnings with the financial knowledge and tools they need to make self-assured decisions. My firm's Apprise Wealth Management. We'd love to get to know you. If you'd like to learn more about us, you can download our free ebook, How to Flourish Through Life's Big Changes, at apprisewealth.com/ebook. And you can also sign up for our blog. Thanks for having me today, Kurt.
Thanks for coming on, Phil.
That's the show for this week. Thank you again for joining us on Money Tree Investing Podcast. My name's Kirk Chisholm, Wealth Manager of Innovative Advisor Group. We don't just manage your wealth, we make your life better. You can find more about me at innovativewealth.com. And of course, you can find me every week here on this show. You can also check out our show at Money Tree Investing Podcast. On our website, you'll have access to the show notes, resources, and the archive shows. Please remember to subscribe on our YouTube channel for immediate access to the new shows when they're released. When you subscribe to the show, it allows us to get access to some of the top minds of investing in personal finance. While you're here, please leave a comment and question if you want us to address it on the show. Have a great week ahead, and remember, no one will care about your money like you do, so invest in your life.